Welcome back to another episode of the Quantium Cast Chart Pack Edition. I'm your host Ryan Kia, and today I'm going to be looking at the chart of MTRO Bank PLC as we covered the fundamentals earlier in the morning. Nevertheless, the podcast was well received, and so we're going to hopefully release this podcast as soon as possible. I should just remind you that if you haven't already, make sure you sign up on our website at quantiumresearch.co.uk. And if you're signed up, just make sure you log in so you can access that PDF on our website at quantiumresearch.co.uk under the chart pack section. All you need to do is make sure you're logged in, click on the chart pack section, and you'll have a file repository. All you do is click that file repository and you'll see chart pack 40, and once you click that you'll be well equipped and ready for this podcast. So what we're going to do now is have a look on the document. This is the chart pack for episode 40. We're going to be looking at the charts of MTRO Bank in different time frames. So the first chart we're going to be looking at is chart 1.1, and we can note that the shares are actually trending lower, with the price hovering, as we've noted in the document, around the bottom of its trend line support, and this is indicated by the bottom of the two parallel yellow trend lines. And if we look at the bottom level of support, we can see that's around 173 pence per share, and looking at the top line we can see that the level of resistance stands at around 450 pence per share. But it's mega important that we look at this chart as simply a bit of guidance, because it is a daily chart and the shares have had so much volatility over the past couple of days, weeks and months that we can't get a picture of a simple intraday trade from just the daily chart itself. And this is something we've talked about quite a lot in our previous chart pack episodes. If you want to have a listen to those, feel free to go on our episode playlist and you'll be able to access them. Make sure you're a member, because then you'll be able to access the PDF as well. So moving back to chart 1.1, we can note that the 20, 50 and 200 day moving averages are moving downwards. That basically exemplifies the idea that the shares of MTRO Bank are actually trending lower. It doesn't mean they're going to fall further, but if one is going short, then you would look to reshort or either open a short position or even sell a long position on a retest of the upper moving average that is shown by the 50-day moving average. That is the cyan line. And if you look down, you'll see that an orange line beneath it, that's the 20-day moving average. And the 50-day moving average has actually acted as a point of resistance. That 50-day moving average stood at around 320 pence per share. And the shares a couple days back went from 250 all the way to 315. And those following the 50-day moving average will be able to notice that that level couldn't break, and so the shares had broken down. There was no direct correlation. But if we look at the chart historically, we can see a resistance at around the 50-day moving average. If we go a little bit further, the 200-day comes into play. But because the 200-day is so much higher than the current price, it is unlikely that the shares of MTRO Bank are going to go all the way to 850 pence per share within a really short time frame that we've mentioned over the next 1-2 odd months. It's very unlikely, but it's just as unlikely for the shares to go to zero. As we mentioned with the fundamental side, a lot of people mentioned, what if MTRO Bank go bust? Well, they're not going bust because they have a good liquidity position. I mean, they're stable. Most challenger banks are in a similar position. These guys actually have more cash than guys like CYBG. The only issue is at the moment is that they haven't given anything for investors to sink their teeth into. To put it in a metaphorical sense, the half-year earnings report stood at around £1.3 million after tax. Well, that gave them a price-earnings ratio of around 100, which doesn't make them cheap, only based off extrapolation. If we actually look at their expected profit for the second half of the year, it is much higher than 1.3 million. It could be near around £10 million, which takes their PE, as we mentioned earlier, to around 25 to 30. We mentioned earlier a little lower, but it could be a better shout to use a more conservative measure and assume that the first half of the year wasn't actually an anomaly, contrary to what I believe, but it's better just so that we can get the most accurate valuation on the company's shares. So let's go back to some targets real quick. we've got Fibonacci retracement on our chart to help us decipher between which levels are good levels for a long or good levels for a short, depending on your bias on the stock. I could use an example. We over at Quantium Research have a bullish bias on MTRO Bank, but we are not long or short at the moment. We are looking for a position. It seems that the shares are having difficulty holding above this yellow parallel trend line support area of 173.5 odd. So if the shares break below there, we're going to target the 2.618 Fibonacci retracement level, and that stands at around 131 pence per share. So to go long there, you'd be targeting the next level, or more so the parallel trend channel line, because that's actually going to end up hitting the share price. If the shares break below the 1.618 area, which they have, then you'd see a bounce on 2.618, and the yellow trend line comes before the next fib level. So I'd only assume that the target wouldn't be as high as around 203.5, which is the 1.618 Fibonacci retracement level, but more so around, let's have a look actually. If we go to the chart real quick, we can get a live one as the time is 4:17 right now. Let's look at the trend channel line. Depends when you get it because it is decreasing, but you'll see a chop and your resistance could be around 170 pence per share, or if you hit it in a couple of weeks time, it could be 150. So it depends where the price goes now. If the price were to break above the 173.5 odd line, as mentioned, that is the yellow trend channel line that we've shown. Once again, this chart is a daily chart, so you need a daily close above that point. Then we'll target the 1.618, which is around 203.5, and if you break above there, you target the 1 fib level, which is around 248 pence per share, which had been the previous level at which the shares of MTRO had bottomed before rallying to the 315 recent high, where they'd almost broken above the 50-day moving average and completely reversed the trend. But they were around 10 pips or so, 10 points off, which is a little bit unfortunate. But we have to adapt as traders to every single scenario. So right now, it would be smart to short if the price retests around 173.5, because as we look at the current share price, we can see a live price of 171.46 pence per share. So the shares are a little bit below that level. If you short and you target around 131.5, which is the 2.618 Fibonacci retracement level, then you've got a decent bit of room to generate some value on this position. And if you do have a bullish bias based on a conviction that MTRO Bank is in fact undervalued as we do, then it would be smarter to accumulate shares, as the recovery would be quite grand. We've given those upside targets at around 450 odd pence per share in terms of the daily chart, assuming the shares can break out. It doesn't look likely that they're going to break out in the short term, but whilst all this noise is going on, remember what the smart money does. They accumulate, but you can still play the share. If you short now and target, say, 131.5, what I'd do is I'd short on a breakdown of the previous all-time low, which was made yesterday at around 175. So now it's 171. I would have opened a short, but because I have such a bullish conviction, what I'm going to do is open on another breakdown of an all-time low. The all-time low today was made at around 168. So if the shares go around 165, I'd short, target that 131 level, probably partially close as it goes down, and based off a medium term to more so short term target, I would target something like 131.5, maybe just above that, close the short and enter long. Immediately switch my position to create some value and hopefully get some value in the long run and trade it a little bit on the up. But at the moment, there seems to be a lot of waiting on the downside. We mentioned the 20-day moving average, which is indicated by the orange line that has been turning down ever since the bond issuance had failed. I believe that was yesterday, on the 24th of September. The shares had crashed. The orange line has begun to turn down. That is the 20-day moving average, as we just mentioned, and that will act as a line of resistance as the shares turn back up. But at the moment, there is a lot of bias on the downside. Okay, so moving on to our final bit, chart 1.2. This shows a more detailed look at what we were discussing a couple of seconds ago. Now, this is the 4-hourly look at MTRO Bank, and we have two green arrows pointing to the right, shown as levels of support. Now, if those levels were to break down, and the example of this would be if the share price were to make new all-time lows, then you would target a level of support at around 131 pence per share. This is based off Fibonacci retracement, and this level, as we mentioned before, is the 2.618 level. Now, if the shares hit around there, look for support. If you're looking to close a short, then that would be the area. If you're long, or you want to accumulate more shares to lower your average, or you just want to open a new long position, then that would be your level, just above 131. If I were there, I'd go for, I don't know, 134.8, something like that. Just a random number, but it gives you a decent bit of room, and you could put your stop a couple of standard deviations away. It's totally up to you how you calculate your stops, but this particular situation shows that if we go on a tighter time frame, this is chart 1.2 by the way, looking at individual 30-minute candlesticks, we can see that that 20 simple moving average point could actually be an area of resistance. Now that is currently at 177.9. So if the price cannot break above 178, let's just say for comparison's sake, and target the 50 simple moving average at around 220, then there isn't really much value. It could indicate further downside for the shares. I'm really shocked, to be honest, because MTRO's shares are extremely undervalued in terms of a fundamental perspective. From what we looked at earlier, these guys are mega cheap. I mean, I was really holding myself back from buying. More so the technical side had been the only thing restricting me. I don't believe that MTRO Bank is going bust. They are the fastest growing challenger bank, which is really impressive considering their share price movement from highs back, I think, a year or so ago at £40 per share to the current price of £1.70 odd. We could refresh now and probably have a look how the shares recovered. 170.5, so they still haven't managed to break the 175. So at the moment we are seeing the price action weighted towards the downside. It's unfortunate, but as traders we have to always make a little bit of value out of any situation. Otherwise, if we hold at a certain level and there are 3 or 4 trades that we could have had, we will be served with a huge negative opportunity cost. I mean, we could have got some value out of our time instead of worrying about a negative position. You can sometimes hedge against your position if you have a long that your conviction is based off, but your technical side, aka your risk management, tells you that the price could trend a little bit lower and you could get value elsewhere. Don't put your maximum allocation into the particular security. For example, if you're trying to go long on MTRO for 10 grand size, you don't put 10 grand in one go. You don't even put 5 grand in one go. It could be smarter to scale in with around 200-300 and then eventually get an average at a price that is extremely lower than what you wanted. So if the shares do go up, you make a return, but if the shares go down and you still have the conviction in the long run, you can actually make much more money than you intended. And that is one trait that most successful traders have, according to a lot of hedge fund managers. I'd recommend reading the book The Art of Execution by Lee Freeman Shaw. He was a fund manager who managed billions, yes, billions. I know that is a crazy figure, but what's more important is the fact that his stories will be able to help individual traders like you in your day-to-day practices. Managing your loss, position sizing, those kind of things are important to always consider, and we always talk about them over at Quantium Research. On our site, we talk about putting your stops a little bit below the resistance point that you believe is that last point until there's a lot of downsides, or putting your entry, your automatic entry, a little bit above the point of resistance, to the point where, yes, you are giving up, say, 1.5–2% of your gains, but you are securing 8 to 12% of your gains. It is really healthy, and a lot of investors miss this out. They think resistance at, let's use MTRO for an example, on the 20 simple moving average on the 30-minute chart, as we have in chart 1.2. If you go long at 180 or 179 and you think that the price will break out and then the price reverses and trends all the way down to 131, you will have taken so much risk for so little value, which isn't worth it. It isn't worth your time or the investment at all. So what would be a little bit more practical would be to put your entry at around 185. Yes, you're missing out on, say, 5 pence per share if the price breaks out, but we've got the cyan line at around 220 pence per share, so you still have a decent amount of reward out there. I mean, what's that, 35 points? That is an immense reward. I mean, we're looking at a ratio of 1 to 7 per percentage of risk taken in comparison to the percentage that you can actually gain. And yes, you'd probably cut your profits around 5 points lower, but you'd still get 215. You get around 30 points. That'll still be a 1 to 6 ratio. That is a winning situation. But anyways, that has been our chart look at Metro Bank. We do have a fundamental bullish bias, but at the moment the technical sense isn't attracting us. We have, though, detailed on the chart packs long side setups, brief long side setups in conjunction with what I've talked about in this podcast, but also short side setups. It is extremely upsetting to see the shares of Metro Bank depreciate this much. I mean, they are down 94.5% from their highs of £40 to the current share price of around 171 pence per share. And it isn't at the fault of shareholders, it's more so at the fault of management, taking on way too much leverage. And it wouldn't have been foreseen. I mean, I would have been short if I thought this was going to happen, but I'll stand there with my hands up and say, I did not see this coming at all. I mean, the amount of bad luck that shareholders have had, it's about time that the company tries to perform and deliver actual returns. But in the meantime, we have to make use of what we've got. And we've provided this PDF, and that will wrap everything up. If you're interested in accessing the PDF, remember to sign up on our website at quantiumresearch.co.uk. Thank you so much for listening. Remember, if you want to keep updated with what we're up to, follow us on Twitter at QuantiumCast. And if you've got any feedback or suggestions that you would like us to maybe include in our podcast episodes, whether the pre-market casts or our one-off series like How to Make Money from Nothing, episode 28, simple ideas that had actually worked for me, feel free to share new ideas with us. We appreciate every single one of you. With the kindest of regards, I've been your host, Ryan Kia. Until next time.